All right, so similar to the exercise that I showed you on Friday, let's go ahead and set up some potential trades for today, Monday, July 31st. So we know that in the overnight session, the buy side has been more dominant. We are using the 45.87 quarter to 96 quarter as key support and the intraday bull bear zone. So as long as the market's holding above that area, the buy side can maintain the recent strength. So our focus should be more on the long side above initial support. And the only time that we should get aggressive on the short side is if we're getting very good trade location or if there are very obvious signs in real time that there is a lack of strength and a lack of momentum, which can leave the market balancing within the recent range. And if in real time we start to see some excess weakness, then of course we'll try to find a good spot to short. But as far as presetting a short setup, that I don't really have a ton of confidence in today, given how Friday played out, given how the overnight session has played out. The intermediate term bias is bullish, and we also know that the last day of the month so far this year has been either bullish or balanced. So that balancing scenario can still trigger a short setup, but if we're seeing sustained upside momentum in real time and the other markets are also heading higher, then at the very minimum, we need to exercise caution on the short side. So in the event that the market pulls back into the pre-market support zone, which is the more aggressive area of support, we can still consider buying there, but I think we may need to secure better location because on the upside, I would target a move into Friday's RTH high, and then my final target is going to be somewhere within the initial resistance zone. Let's be conservative and just start with 24.5 and see what that looks like. So 46.03 gives us 3R. Now before we finalize that order, let's take a look at the initial support zone because that's really the main area of support that is more critical for the buyers to hold. And as long as we hold that area, ES can push back up into pre-market resistance and initial resistance. So 45.93 is going to get us 3R. What I'm going to do is make a copy of the pre-market support long, and I'm going to have two variations here where on one of them I'm going to put my stop behind 93. So this is what I would call daisy chaining the setups, where you get into the more aggressive long, but your stop is behind the entry of the conservative long. Now, with our short-term bias being neutral, I'm not going to submit any of these trades in advance. I'm going to assess the real-time situation and then decide what makes sense. For example, what if the market pulls back into pre-market support and the AD line is holding up really strong, there's a bullish disconnect, and the NYC tick is just now testing the zero line? Well, in that case, I should get more aggressive and be willing to jump in, perhaps even at 46.0475. So that's where, I can hit the chase button, quickly adjust my entry to my minimum of 2-to-1 reward to risk, and jump in. Now, what if the market is coming down into pre-market support and the AD line is already pushing into negative territory, or NASDAQ is putting in some sort of smaller time frame breakdown? Well, in that situation, I probably want to wait for at least 46.03, if not 45.98 half, which you'll notice is technically a little bit beyond the zone. So I'm actually going to slide that up and make it 99 half. I still have 2.5R potential, but I don't want to put my order behind the zone because I want that zone to hold, right? So these are potential setups that I can take on the long side. Now, what about if the market puts in a breakout above 46.1475 to 1875, which is the pre-market resistance zone? Now, a break above that area is an intraday bullish indication, and it can result in a test of the recent highs in the 46.24 half to 34 half zone. As far as buying that as a breakout, I'm not 100% confident in just buying 19. In this case, I will want to wait and see how that breakout shapes up. I want to know that the market has at least consolidated near the highs before it breaks higher. And in that situation, I can consider perhaps buying the break. So let's set up a breakout above the pre-market resistance zone of 1875. You can see entries 19 quarter, and on the upside, I actually want my scale to be 24 half in this situation. My high probability is going to be closer to the edge of that zone. So we're going to push this up to 32 half for now. And then the final, in the event that we really push, perhaps we reach 44.75. So just based on this, you can see that an upside breakout is not really shaping up to be as great of a setup unless we're able to get in with a smaller stop. And that's why I was saying that I want to see how the real-time situation shapes up there, because we may be able to get in with a stop just behind the zone, right? So we might be able to get in with a stop at perhaps 1375. And in that case, if the market even pushes just at 32 half, I can get 2R out of it. So I'm open to this idea, but again, with our short-term bias being neutral, with the potential for the market to continue balancing within the recent range, I don't want to just kind of get that order submitted, because then it's just going to auto trigger and get me in. So I don't want to do it that way. Today, I think it makes sense to take a wait and see approach, see how the opening range plays out, see how that opening action plays out, watch how the other markets are performing, and then make a trading decision. Remember, it's just one day. Worst case scenario, I miss out on a 2R trade, not the end of the world. Now, let's look at some possibilities on the short side. As I mentioned in the morning video, today there is that potential to test the recent highs in the 24 half to 34 half zone and possibly even attempt a breakout above it. Now, that is still larger time frame resistance, and we would need to see some decent momentum to take that area out. So I am open to attempting a short, but I need to really figure out trade location. I want my stop to be above 37 half in this situation. In order to put my stop just beyond 34 half, there would need to be some real-time signal. So either the market would need to be quite exhausted into the back of the zone, or I would need to see perhaps a bearish disconnect on the advanced decline, or maybe the NASDAQ getting exhausted into its recent highs, which can perhaps stall the S&P. But I'm not really super interested in getting aggressive on the short side today. I think that we should be exercising caution at the short side. Even though 24 half to 34 half is larger time frame resistance, it has already been tested last week, and we've already seen a very large response off that area that took the market back below the recent multi-day range where buyers stepped in, so it ended up being a false breakdown, and now we're pushing right back up to the highs. The intermediate time frame bias is bullish, so there is that potential for a breakout attempt above initial resistance today, and I need to keep that in mind. I don't want to fade just for the sake of fading. I want to see what are my targets. Is it worthwhile to take a fade? Well, if the market does indeed fail at the recent highs, where can ES go? Well, we can drop back into the 1475 to 1875 zone. So I definitely want to make sure my scale out is ahead of that. And even the high probability target in this situation may actually be 1475 to 1875. So I'm going to set my high probability here, which is quite conservative, to the overnight high. And I'm going to set my final target in this situation to 4607. So right over there. So 3275 is what's going to give me 3R if I'm putting my stop beyond 3775. Let's do the same thing here. So 1875 is the high probability and 07. So 31, 3275 are potentials. Let's try a similar idea on the next zone, 45 to 51. And I would be more confident shorting 45 to 51 because I think that it would be an overshoot into that zone, and the only way we clear 45 to 51 and the zone above 45 to 51, 53 half to 63 half, is if we're seeing trend up conditions. And the likelihood of a pure trend day, I think, is relatively low because we don't really have any major catalyst today. It's the last day of the month. So I can see a bullish tilt on the last day of the month, but at the same time, we can definitely get responses at 45 to 51 and 53 half to 63 half, and the range potential would get exhausted by the time we reached 53 half to 63 half. So fairly confident in shorting that zone. But 45 to 51, the high probability I don't think is going to be the overnight high necessarily. I think the back of initial resistance is a higher probability bet. So we're going to set the high probability to 24 half. And in this case, we're going to set our final target to just above the pre-market resistance zone, which can then act as support. So let's go ahead and set that up. And in this case, I'm actually going to set the final target to 24 half here. And the high probability will be the top of initial resistance. So that gives me a 57 half entry. Again, the likelihood of the market getting there seems a bit low at this time. Let's take a quick look at just what the balance break from the overnight session looks like. So you can see that the 100% takes us to 42 quarter. So, the likelihood of a move all the way up into 57 half is pretty low. So again, it's so far away, I don't need to submit that trade just yet. I can deal with it when the market gets there. So on the upside, we have some potential shorts, but again, if the market's breaking higher on some decent momentum, then I think we're going to have to exercise caution. We will set up a potential short off the 1875 zone. Back of zone is probably going to work much better. And in this case, the high probability will be a move down towards the gap fill. And the final will be the initial support. So 17 quarter is what would give us 3R. Again, not submitting this trade just yet, simply because of how strong the overnight session has been, or at least how stable the overnight session has been. Now, what if we get a breakdown below the initial support zone? Now, I think that by the time the market breaks initial support, it may be getting a bit exhausted. So again, these are things that require that real-time read. And I'm going to go ahead and set up an IBB below initial support. But I am also going to make a copy of that zone and just set it up as a potential short, just right here. So this way, I can just take a zone fade on any pullback into that intraday bull bear, right? If we kind of, let's say, liquidate and break the zone, I may not want to get in right away if we're already exhausted, because in that situation, pullbacks are quite likely. So instead of drawing a fib and trying to figure everything out in real time, what I can do is preset a zone fade on the short side if that zone gets taken out. And in that situation, I wouldn't want to shoot for 51 quarter. I think the high probability is fine at 64.75, but probably a good idea to just get out within initial support. I don't think it makes sense to really shoot for too much more than that, and even that zone I think is going to hold. So we don't want to shoot for too big of a target. So 89.75 is a potential short in the event of a breakdown, and if the market balances at the intraday bull bear and then breaks it, then I can even take it at 86.75, and in this case I am going to set the high probability, and the final is going to be Let's go with the same target of 57 quarter. And of course, these are subject to change. Um, Even if we only get to 64.75, I'm still getting 2R, so good enough. In this case, again, if we only get to 64.75, still getting 2.79R, good enough. Let's also set up a long at the balance area low. Now, in the event that we get all the way down into the balance area low, I would anticipate an eventual move back into the 8750 high volume node and back into the broken initial support, but I think the 69.75 to 77 quarter area is going to act as a hurdle. So I want to change my high probability to 77 quarter, and I want to change my final to 86.75, just ahead of that broken zone. So we can see 58.75 is giving us a potential for 3R. Now with this information, with the 58.75, we should go back and review our targets, because my target should not be 57 quarter if there is a potential 3R opportunity at 58.75. So I'm going to change this to 59 quarter, and this as well to 59 quarter. So, still 2.4R, still getting 3R here off of 89.75. So these are potential trades for today. And the key is going to be to remind myself that this is a game of odds and probabilities. There are no guarantees. As long as I'm not seeing any major warning signs, I should be executing the longs, despite the result. We can't really focus on the outcome. We must focus on the process. So, a mental reminder that unless it's looking like a trend down type day, or there is just excess weakness in real time, I should definitely be buying initial support first time down, and pre-market support is a possibility, but it's the more aggressive area. So if I miss that, or if I misjudge the real-time situation and that then results in me missing the pre-market support, I'm okay with that. I'm not going to beat myself up over pre-market support because it is the more aggressive spot. But if I miss initial support, and I miss it purely because of wanting to get the absolute precise and best entry, and I miss it by 2 or 3 ticks, that's on me. Because it is my responsibility to observe, be aware of what's happening in the moment, and make adjustments. It's not about being mechanical. Like the exercise that you've just seen right now, the purpose of it is not to be overly mechanical with predetermined targets, presetting everything and just kind of putting it on autopilot. The purpose of doing this exercise is thinking through the trade setups, having it ready to go, so that we don't need to do this mental math in real time. And we can use that extra cognitive ability or bandwidth to focus on the mental side of execution and overcoming kind of our default programming of trying to avoid pain. Because that's usually how most traders miss out on very good opportunities, is that they are trying to avoid the pain of loss or the pain of being wrong on the idea. That takes up a lot of cognitive bandwidth and emotional bandwidth. They miss it by a little bit, or they miss it entirely, and then they look back, and of course the cycle continues. I could have done this, I should have done that. So the purpose of going through this exercise and presetting potential trades is that when the market is close to your entry, you can just focus on execution. You don't have to think about risk reward and stop placement. All that is already done. So the focus can be on getting into the right mental state of high performance and executing your system. That's going to be a wrap on today's video. Hope you find it helpful. Until the next one.